An XRP prediction has been making waves lately, with some voices suggesting it could reach 750 in 2025. This has sparked a lot of excitement and also a lot of questions. I've had messages pouring in from viewers asking if it's realistic. And honestly, to give you a clear answer, we need to walk through exactly what's being proposed, the kind of chain of events that would need to unfold for that kind of price to even be possible, and whether it makes sense from my perspective. So today, we're going to break it all down step by step, so you fully understand the reasoning behind this big price target and why it's got so much attention in the community. The prediction often gets framed as a domino effect theory, where one major event triggers another, and each step along the way increases demand for XRP until it becomes the global bridge asset for massive amounts of liquidity. Let's start with the first domino in that chain. This one revolves around a global macroeconomic shock. The scenario goes like this. Oil prices spike sharply, forcing the Bank of Japan to raise interest rates. That move triggers the unwinding of what's called the global yen carry trade, a situation where cheap Japanese yen has been borrowed and used to fund investments all over the world. If that unwinds suddenly, you get tremendous volatility as leveraged positions collapse, impacting global equities and bond markets. It's a plausible scenario because oil shocks happen, but whether it would lead to a full-blown carry trade collapse is still debated among economists. The next step in this theory involves the Japanese financial system shifting toward a central bank digital currency, the digital yen. The idea is that Japan, which holds significant amounts of U.S. treasuries, accelerates the rollout of the digital yen and redirects domestic capital away from U.S. debt to support its own currency. This would tighten global liquidity and destabilize bond markets. While it's true the digital yen is in development, a complete and sudden move away from U.S. treasuries, without some extreme external push, is unlikely in the immediate term. Another critical part of the domino theory focuses on stablecoins. In this scenario, new U.S. and global regulations would require stablecoins to be fully backed by U.S. treasuries, which could make stablecoin issuers some of the biggest new buyers of U.S. debt, potentially in the range of $2 to $5 trillion over the coming years. Alongside this is a risk narrative. Investigations into the largest unregulated stablecoins could cause panic, leading funds to flee into regulated alternatives. That kind of shock could trigger a significant liquidity crunch across the crypto market. My view is that, while there are real issues with certain stablecoins, the chances of a complete collapse in the next few months are minimal, especially since issuers have been given years to adjust to potential regulations. The theory continues with the idea of crypto market contagion. If a stablecoin panic were to happen, combined with ETF volatility and major sell-offs, the impact could spread rapidly. Bitcoin, with deeper ETF exposure, could even become a systemic risk for some financial institutions. A meltdown of that scale would hit Ethereum, other altcoins, and eventually spill over into traditional markets. While XRP might eventually benefit if regulated dollar-backed tokens on the ledger gain traction, the immediate aftermath of such a crisis would almost certainly be painful for the entire market before any long-term advantage emerges. The chain reaction moves next into a large-scale equity sell-off. In this stage, institutions facing losses might sell off stocks aggressively to raise cash, while central banks become less able or willing to step in. That could lead these institutions to look for alternative liquidity sources. This is where on-demand liquidity, powered by XRP, could potentially become attractive as a faster, cheaper settlement layer for cross-border transactions, especially if traditional systems seized up. However, while this is possible, it's not yet at the global scale required to instantly meet that kind of liquidity demand. Finally, the scenario ends with regulatory clarity and ETF approval. In this step, US-based XRP ETFs are launched. Ongoing legal disputes are fully resolved, and a more crypto-friendly political environment helps accelerate institutional participation. If that clarity comes, ETFs could draw billions in inflows over time. But even with these wins, without the extreme domino effect playing out exactly as theorized, realistic short-term prices are still far from triple digits. Now, here's the key point. The idea that all of these events happen perfectly, back to back, within just a few months is, in my view, less than a 10% probability. The far more likely path for 2025 and 2026 is steady adoption, gradual increases in institutional participation, and higher on-demand liquidity usage, supporting prices in a more reasonable range, possibly a few dollars to the low double digits, unless a truly extraordinary global shock happens. The 750 figure comes from the assumption that XRP becomes the primary bridge currency for the majority of the world's liquidity flows in record time. To put that into perspective, XRP at 750 would mean a market cap of around 44.5 trillion, about 20 to 25 times larger than Bitcoin's market cap today. Achieving that would require every major bank, corporation, and government not only to adopt XRP, but to use it exclusively for settlements and cross-border liquidity. For that kind of scenario to happen, you'd need full worldwide regulatory clarity and direct government endorsement, central banks actively holding XRP as part of their reserves, Fortune 500 companies and banks accumulating XRP for their treasuries, Ripple's stablecoin, and tokenized assets dominating global usage, a major share of existing settlement rails, like SWIFT, migrating over to the ledger, and global macro or banking crises, driving investors into XRP as a flight-to-safety asset. Without all of that happening together, hitting 750 in just a few months is close to impossible. Some people point to ongoing upgrades to the ledger as part of the justification. These include new amendments for liquidity pools, decentralized exchange features, permission domains, and lending functionality. For example, XLS64 proposes more advanced asset management through a pseudo account system. XLS65 enables pooled single-asset vaults for lending, borrowing, and yield generation. And XLS66 introduces on-chain lending protocols for fixed-term loans. These are great developments and important building blocks for a stronger ecosystem, but they're tools for long-term growth, not instant triggers for trillion-dollar utility in the short term. From my perspective, XRP absolutely has the technology, partnerships, and real-world use cases to eventually become a major global settlement layer. Payments, stablecoins, tokenization of financial assets, and even central bank reserves could all be in its future. But massive transformations in the global financial system simply don't happen overnight. Expecting them to all play out in the next 5 months is not realistic. At CryptoNews, our goal is to keep you informed with clear analysis and realistic expectations. I personally believe XRP could reach extraordinary valuations in the long term, maybe even 4 or 5 digits someday. But that's a process measured in years, not months. For the near future, the real victories would be getting legal clarity finalized, seeing ETFs approved, and watching steady growth in real-world utility. If those dominoes start falling, we'll cover it every step of the way. This is CryptoNews. Thanks for joining me. Stay informed, and remember, nothing in this video is financial advice.